Hi there, and welcome back to day 2 of IHIF Asia, and I'm delighted to be joined by Steve Carroll,
Thanks for
head
having
of
me.
capital markets for CBRE in the APAC region. Steve, welcome.
Thank you. Thanks for having me.
Thank you. Well, listen, I want to start off by asking you, you guys just recently released your 2025 investor sentiment survey, which showed that 72% of investors are looking to allocate more capital into the region. What's underpinning that confidence in the Asia and APAC region?
Yeah, look, people are really looking at Asia Pacific for growth. And I guess growth driven by visitor arrivals and visitor movements around APAC. Year to date and full 2025 numbers, we're looking at a 9% increase in movements and passenger numbers around APAC. That's a lot more than the other regions. So that underpins the growth of people moving around. In addition, these people moving around need to stay in hotels. And so they're targeting the hotel as the entry point to look for growth and to hit their investment returns.
And are you seeing the profile of that capital change? Are these investors that have already allocated capital into the sector, or are these investments that are coming from other real estate classes, for example?
Well, there's a really strong, diverse base of sort of investors, but predominantly the private high net worth and family offices are driving into the space for long-term wealth. But in addition, you've got the institutional capital, particularly private equity, that are looking for value-add short-term returns and really picking up that growth point I talked about.
Yeah, that's exciting. And in talking about the asset classes or the segments within hospitality themselves, I mean, clearly luxury and lifestyle has been the darling of the sector,
Sure.
particularly post-COVID. But you're starting to see some shift into perhaps upper upscale. Explain, what else are you seeing in the marketplace?
I think in the private space, in family offices, they're looking for long-term generational growth and scarcity of assets. That's always suited the luxury segment. When you start to look at institutional investors, they're starting to look at value add and asset level sort of enhancement, and that really fits the mid-tier sort of upper upscale segment where you can change the brand, where you can refurbish. There's more mid-tier and upper upscale hotels that come to market. So the institutions are looking for scale, so they have to target that segment to get scale and value for their investors. Second of all, I think the enhanced labour and the headwinds from the labour market across the regions. In mid-tier and upper upscale hotels, you need less labour. So it's less volatile, and so the institutional investors are diving into that space.
Yeah, and then real estate is always location.
Exactly.
APAC is a massive region, so you can't just paint it with one broad brushstroke. Where are you seeing in terms of countries and destinations within Asia that are attracting some of the most interested capital allocations?
Yeah, by far, Japan still is the largest market for investment for the obvious reason, through growth and the cheaper cost of capital and the country size. Australia remains really attractive to investors through its growth and transparency. But we're starting to see a real renewed interest in Hong Kong. It's coming back. So watch this space, Hong Kong's here. In addition to Hong Kong, Seoul. Seoul is a very attractive market. It's got limited supply, high growth, and lots of inbound pouring in. So watch this space. I think investors are really going to dive into Korea. On the more emerging markets, we're really seeing strong interest due to the macro fundamentals in Vietnam. In Jakarta's on the radar, but still yet to sort of get to where Vietnam is. And then I will say that resorts, particular resorts that have high inbound and great airline capacity into their airports, are always strongly regarded in the institutional space.
Yeah, and one asset class you didn't mention, branded resi, also another sort of very popular and often talked about asset class and concept. How is that performing in the Asia region?
It's still not as mature as North America, that's for sure, but starting to move into the space, and started in resorts and it started in luxury, and developers are really using it to sort of build out their capital base, and consumers are picking up the consistency and the quality that a brand delivers to a development. So it is growing. What we're also seeing is branded residential is moving downstream, away from luxury into upper upscale, but still really targeting that resort market. So we're in the infancy in Asia when you compare it to the other sort of regions such as North America, But watch this space again. I think it is a growing segment and will be quite attractive moving forward.
Yeah. No, and to your point, Steve, I mean, Hong Kong's absolutely buzzing. I mean, since I was here, just 6 months ago, you see a palpable difference in the city. The hotels, the bars, the restaurants, the hospitality scene is absolutely buzzing. So to your point, it's doing very well.
Yeah, look, it's still got a ways to recover.
It does.
We still need to get more occupancy in to allow the operators to revenue manage the rate up, but we're on track. I think Hong Kong from an event space and a corporate and leisure is picking up, and the mainland Chinese are continuing to come. So Hong Kong will get back. It's not if it will get back to historical levels, it's just when.
And it's being supported by constrained supply. There's not a lot of new supply coming into the market.
Look, the cost of construction across all markets across APAC is elevated, and it's still cheaper to buy than build. So at this stage, we're not seeing huge development sort of profiles across any market, and Hong Kong picks up that stat.
Yeah, so we talked about regions, we talked about concepts and segments. What about the origin of capital? I mean, we're living in an inflationary environment. We're also living in a tariff and trade barrier environment, particularly coming out of the U.S. these days. But there's been a lot of talk that intra-Asia capital is flowing widely and freely throughout the region. Is that what you're seeing?
Yeah, absolutely. Inter-regional capital, whether being direct or indirect, is definitely the market leader today. And so most of the capital coming from APAC. We are definitely seeing strong US support via the private equity firms, whether that's the endowment funds and others that support the larger PE companies. And what I said at the start is they're looking for growth. Mm-hmm. They're looking to tap into that higher X growth compared to sort of North America and Europe, and that's what they're looking to achieve. But ultimately what we're seeing is a growing middle class, there's a growing wealth sort of happening in Asia, so that as you'd expect, we're getting more capital coming from Asia and going across Asia than we have in the past.
Yeah, it's very exciting. And also, to your point, some of the capital, and particularly in Asia, is longer term capital, right? They're looking at these assets as long-term holds, and so therefore they're driving alpha by sweating those assets. But they're doing that in an environment with labor cost increasing, inflationary environment, supplies and so forth are all costing more. So where are you seeing some of the best hoteliers and operators, owner-operators, driving alpha? Where is that value add creation?
Yeah, I think at the asset level, look, a hotel's in its very nature is operational. So driving efficiency at the operational level. So having capability to actually manage and asset manage your assets, whether that's through payroll or whether that's through direct initiatives to drive revenue. So I guess driving revenue, they'll be pushing the operator to make sure you've got the right market segmentation, the right geographical sort of coverage, and the brand companies are actually marketing to the broader audience to attract the consumer to drive revenue. I think in addition, payroll. How do you manage payroll on site and asset management, diving in and working with your operator to achieve a real efficient cost base? You add the top line and the costs and you drive revenue. On the longer term gestation of these assets, that you need to spend money to keep up. It's the changing sort of the evolution, the changing dynamics of this market. You can't sort of sweat an asset for 20 years anymore. In every 5 to 7 years, you need to be uplifting. And what we're seeing is owners that spend money regularly, maintain their assets and meet consumer demand are winning the race.
So you're seeing that CapEx allocation coming from that longer term capital profile, actually helping to drive that NOI?
Yeah, both, not just from long term, even the short term. You can get real short term ROI on some pretty simple things, and the private equity guys are really good at doing that. So where we're seeing selective CapEx and really defined CapEx that drives a real return on investments, that's where investors are putting their money.
Got it. So 5 years from now, I mean, we've talked Japan is very hot. Hong Kong still has, doing well, but still has some runway to get back to those 2018 levels. Where do you think the next emerging destination in Asia will be in that 3 to 5 year timeline?
Yeah, I think Vietnam. I think with the domestic base there and the macro factors, I really believe that Vietnam will come to life over the next 5 years. I think in the next 5 years, you'll also see China outbound come out and fill the global travel network again, benefiting lots of destinations. But I think in Asia Pacific, emerging markets, I think Vietnam is one to watch. I think on tier 1 markets, I think Seoul and Hong Kong will rise to the surface, and Japan the growth is not going to stop. I think in 5 years' time, we'll be talking about how hot the Japan market still is.
Well, so there's a lot of excitement and still a lot left in the tank. So Steve, thanks very much. This is an exciting region and very much appreciate you giving us some time.
Thanks for your time.
All right,
Thank you.